Okay, well, welcome back to Bazaar Morning Call. You're watching us live from the CNBC-TV18 Motilal Oswal studio right here in Mumbai. Hope you've had a great weekend. We kickstart a brand new day and looks like the market has been cautious for a while. Looks like that's set to continue even today. Sudarshan Sukhani of Technical Trends and Mitesh Thakkar joins in now. They're going to give us some views on what to expect for the day. Sudarshan, good morning. Do you think the 200-day moving average will get tested? If not today, then this week. And does this continue to be a sell-on rally market?
Good morning. I don't much track the 200-day moving average, but I track the support and resistance levels. And on budget day, the Nifty had fallen to 17,350 and bounced back from there for a 10-12-day rally. We are now coming exactly to that point. So my sense is that the 17,350, 17,400 zone should act as support, and we should be looking at the beginning of a relief rally. Now, whether the relief rally will sustain for many days or fizzle out in the next few days is difficult. But for today and tomorrow, the trade would be to expect support to hold and look to buy the Nifty. It's a short-term trade, but it's still a trade to go long. And the same applies to the Bank Nifty, which has given the first signs that it may be willing to participate in any Nifty rally.
Okay, that's interesting. So short-term, maybe a pullback coming after the declines we've seen non-stop. Gentlemen, good morning. Mitesh, what about you? How are you seeing things?
So, good morning, Prashant. We've been calling for a test of 200 average in the last few days. The first level of 17,500 got breached on Friday when we started closing below that. And I think 17,368, 370 is the area of 200 average. I think that should be tested. Good chance that we'll eventually break below that, because with the decline, I think what's happening is that the medium-term indicators are slowly turning negative, and that could add to the pressure. And therefore, I think a test of 17,000, 17,100 zone could happen. So negative, this is a classical sell and rallies market. So if you get any pullback to 17,600, 650 zones, add on to your short position. Otherwise, stay with the negative bias in general.
Okay, all right. Morning, Mitesh. Go ahead with your picks as well for the day.
Morning, Ajal. I have two buys and two sells. On the selling side, a couple of metal names, we saw some kind of declining trend starting in the last few days over there. So Hindalco is a sell on a mild bounce back around, let's say, 417, 418. Go short with a stop at 427 for targets of 400. And Jindal Steel and Power is a sell with a stop at 572 for targets of 535. Gas Authority was a recommendation last week as well. Even now, GAIL is looking very strong. So a fresh call has been issued here. Buy now with a stop below 101 for targets of 108. And Dixon Tech is giving some kind of a reversal from oversold levels. So buy with a stop at 2750 for targets of 2880.
Okay, and Sudarshan, how about you? What are the ideas that you're looking at in terms of buys and sells today?
Well, I'm looking at more stocks to buy. Colgate is the first buying opportunity. The stock has gone into a huddle, moving in a very narrow range for the last 1.5 months. It could break on the upside. Buy with a stop under 1440. National Aluminium is my only intraday short. Actually, aluminium stocks, all of them had a bad day on Friday. So perhaps that could continue. Look to go intraday short with a stop above 80. Petronet is a buy. That stock is making a very attractive bullish pattern and is on the verge of breaking out. It's outperforming the broad market, including the Nifty. Buy with a stop under 218. And LTTS, L&T Technology, is a buying opportunity. It had a big rally and now a sideways move, which is actually a correction, which is not going down. That's a strong bull sign. Buy with a stop under 3,600.
Right, gentlemen, good to speak with you. Thanks very much, and we speak again soon. Chandan Thapari of Motilal Oswal Financial Services is also with us for some trades on the F&O side. Chandan, good to have you with us here. Thanks very much. How are you seeing things, Chandan? Sharp declines and another impulse down on Friday out of the US market. But, if you look at what the pre-open is indicating, it's not that large a cut. Maybe, it accelerates after open. But for now, it's 17, 18 points down. What would you do?
Good morning, Prashant and Sonia. Thanks for having me. So if I look at the data setup from previous series to this series, the rollover of Nifty is 73% with roll cost of 0.63%. So rollover is slightly lower compared to the Jan rollover of 79% and average rollover of 77%. But if I look at the historical price trend, month-on-month basis, whenever the Nifty declines for 3 consecutive months, it witnesses good recovery in the 4th month. So this was the last month where we we are closing negative on month basis. So I believe that budget low and slightly lower than the same will be tested, and then we can see some recovery from lower levels. Similarly, if I talk at the Bank Nifty, that is continuously underperforming, down by 4% in the last series compared to Nifty decline of 2%, but still we are expecting to budget low of 39,400 zone. So structure is clearly down on immediate basis because both the indices are making lower top, lower bottom. But now it seems that after some more decline, somehow both the indices are likely to have some bottom out process. So I'll focus near to 17,250 in the Nifty and 39,250, 39,500 in the Bank Nifty for the bottom process in the market over the next couple of days. Now looking at the stock wise, first there is buy on Axis Bank. This beaten down name is bottoming out. 2 days back we formed a bullish engulfing pattern with bullish divergence on the mechanical indicator. Is surpassed a falling supply trend line on the daily scale. So some recovery led by short covering can be seen in the stock. One can buy with stop loss of 830 for upside move towards 875, 880 level. Second trading idea, that is from the power space. We have seen some buying interest in power and energy stocks. So stocks like NTPC looks good. The stock has given a higher base with some put writing activity. Short covering is also visible. We have seen 93% rollover from Jan to Feb, which also indicating some bullish bias in the counter. So one can buy with stop loss of 168. Here we can see a target towards 180, 182. One sell idea, that is sell on PVR. The stock is continuously falling down. Every small bounce is being sold. Stock is trading near to its 52 weeks low, and shorts are carrying from previous series to this series. So recommending to sell on any small bounce with a stop loss of 1625. Stock can drip down to 1520 levels.
Okay, all right, Chandan, thanks so much for stopping by and giving us those details. And in fact, you spoke about energy as one of your picks. So let's focus on the energy space itself. Suzlon Energy, well, that's a stock in focus. We're joined by Mr. Himanshu Modi, the group CFO of the company. Hi, Himanshu, morning. Thanks so much for joining in. Well, you'll have done a rights issue and you've called for the remaining money as well. So give us a couple of details. One is your interest cost has come down to, I think, sub 90 crores in the past quarter from close to around 190 crores. So that's good news. What does the debt come down to, if you could give us a target out there? And on a yearly basis, what is the interest cost you can guide for?
So good morning to you. So as you rightly said, we've called for the second and the final tranche of rights issue on Friday at our Securities Issuance Committee. So the record date for that would be 2nd March, and the subscription window would be 9th March to 23rd March. So that second and final tranche is for another 600 crores, of which we are going to use 317 crores towards debt repayment, and the balance will be used for our own capex and working capital requirements. Our debt, net debt as on 31st December 22 was about 2,050 crores. So with the rights issue tranche coming in and debt going down further, in addition to our scheduled repayment, we're looking at a net debt of close to about 1,700 crores with the financial year end.
Okay, so 1,700 crores from 2,050 crores, right?
That's right, yes.
What does it mean in terms of an interest payment? A couple of years ago, your interest payment was around 1,300 crores per year. Now that's come down drastically. For FY24, given that you have some money that's coming in, what does the interest cost come down to?
Well, I think interest rates, are of course hardening. So I would say that in the vicinity of about, with the 1,700 odd crore debt, in the vicinity of about 200 crores is what the interest cost should be for FY24.
All right. Himanshu, hi, good morning. Could you tell us, you have a sizable sort of order backlog, right? What proportion of it is from the Adani Group? And could you tell us, given the troubles there that we've seen over the last 1 month plus, have you seen any movement in that? Has there been any cancellations, any deferment, etc.?
So our current order book is roughly about 780 megawatts. And of that, none of it is from the Adani Group. We do have some existing orders, but at an operating level, we haven't seen any hitch or any hurdles in being able to service that at both ends, even from the customer end, even at our end. So, whilst I'd not like to comment on the speculation, but from an operational perspective, it's life as usual for us.
So in the wind energy space, you have an order book of around 780 megawatts right now, as you said. So nothing from the Adani Group is what you're saying?
That's right. Out of that 780, it's nothing from the Adani Group.
But they were your customers, right?
They were. So whatever orders we had, a large part of those have been serviced out in FY23 itself.
Okay, and the payment has come in entirety?
Yes, I mean, there are tranche-linked payments. So, while as policy, we will not talk about specific order details, but
Sure.
a large part of the payments have been received. And as I said, operationally, we are not seeing any hurdles there.
Okay, got that. So can you tell us, this whole renewable energy, wind energy space is a big focus area for the government. So what kind of order visibility do you have over the next 1 to 2 years? How much do you think you could grow this wind energy business?
So order visibility is a tough one to put a number at it. We certainly have a very strong order pipeline under negotiation with various customers. As you're also aware, the MNRE just announced policy to do 8 gigawatts of wind per annum. Now, that's of course a very welcome move. The reverse bidding in the wind sector has been discontinued, which was bought in 2017. So obviously, all the policy tailwinds are now available to the industry. And from a Suzlon perspective, we are very well set to capitalize on that with our balance sheet woes behind us now.
All right, Himanshu, final question before we let you go. You've given us the key numbers. Your enterprise value will be close to around 10,000 crores, the market capitalization plus your debt put it together. What is the EBITDA number? Because that will be the other key variable from here on. At the 9-month mark, well, pre-Forex, I think it's around 600 crores odd. For FY24 and FY25, given the thrust of the government on the space that you're working in, and given the measures that you all have taken, what could be the rough EBITDA number?
So again, very difficult for me to give you an EBITDA number because it depends on the amount of order intake. I mean, as I said, we are looking at 8 gigawatts per annum as an industry practice. And historically, Suzlon has been able to maintain about 1/3 of its market share over the years. And there's no reason why we should be able to continue to do the same going forward. With that, of course, we should be looking at healthy order book top line and therefore EBITDA numbers. For FY23, as you rightly said, 9 months, we've had an EBITDA of about 600 crores approximately. So if you annualize that, we'll be at about 800 crores for FY23 on an annualized basis.
But what about FY24? Can you do 250 crores per quarter?
A tough one to give you a sort of directional, but I think fingers crossed, we should be able to certainly outperform FY23.
Okay. Himanshu, would you, I mean, as you're saying, you're out of that sort of debt issue, etc. I mean, you're getting out of it now. And you're doing well, one-third market share, right, in the sector that you operate in, and no reason why you should not maintain that. In terms of potential M&A or approaches, that has been something which is discussed on and off. Would you be open to offers? Have there been offers? Could you talk about that?
So again, this is, largely speculation. I think after the unfortunate event of losing Mr. Tanti on 1st October last year, there has been a strong succession plan in place from the family side, from the management side. So there is no such discussion actively going on either currently or in the past.
Okay, all right. We'll leave it at that. Thanks a lot for joining in. Appreciate your thoughts and the numbers that you shared with us. That's Suzlon talking about bringing down their net debt from 2050 crores all the way to 1700 crores. And they also talk about how there are no delayed payments from the Adani Group. Vivek is joining in now. He's going to talk about the Adani Group stocks that continue to be in focus. Vivek, over to you.
Well, that's right. So, Adani Ports came out with a mid-quarter update as far as its cargo volumes were concerned. 300 million metric million tons is what they've achieved. The implied ask rate for Q4 continues to remain quite steep, in line with the company's guidance of somewhere between 350 to 360 million metric tons. Now, the other important development that we are looking at is the report that Bernstein has come out with on the entire group. So, what they've done is they've gone ahead and analyzed the debt repayment schedule for all of the Adani Group stocks. So, what they're saying is that March to September of 2024 will be very important for the company and the key test. And what are the key events? they've lined it out. First one, a leverage of almost $3 billion that was taken for the Ambuja acquisition, and that is maturing in March of 2024. The other important one is the Ambuja warrants as far as the preferential issue was concerned, and this is almost 15,000 crore rupees, and this, this particular fund infusion is required by April 2024. The second tranche of $1 billion of Ambuja, that is maturing in September 2024. Adani Ports, a 650 million bond issuance that is maturing in July 2024. Adani Green Bond Holding, this bond of almost $750 million is maturing in September 2024, and currently the yield for this is almost 20%. Adani Green Bond Holding, 20% yield is what they believe is going to be the trickiest for the company to actually go ahead and service. So what they're saying is that while Ambuja Cement and Ports business have strong assets, the timing of the maturity could be quite tricky, and this would be the real test as far as the group is concerned.
All right, thanks a lot for that. Well, we're just heading into the opening for the market, about 30 seconds left. The biggest loser on the index today could be Bajaj Auto, because reports are suggesting that the company has taken a 25% production cut across its export plants, and that happens next month onwards. We all know that there are uncertainties in the export market. So Bajaj Auto in pre-opening is suggesting a steep cut down, almost 1.5%. For the market on the whole as well, there's been a weak global handover, so the expectation is that the start will be in the red, and it has been a sell-on rally market, so that's something that could continue today as well. Here's the first take on the index, not looking good. 50 points gone on the Nifty. The Sensex straight off the back is down 170 points, so not a good start to the week at all. In fact, Bajaj Auto is your biggest loser now, 4% knocked down on that stock, 4.5% gone now. We did reach out to the management, and the management did mention to us that the export production has been lower for all two-wheeler exporters for the last few months, and that's nothing new. But nevertheless, the street is taking note of that, down almost 2.5%. The other space that's under pressure is IT. Infosys, Tech Mahindra, HCL Tech, TCS are all down in the red. You have Maruti that's down about 1%, ONGC, Eicher Motors, M&M. In fact, all the auto stocks ahead of the sales numbers in a couple of days are under a bit of pressure. On the upside, Cipla is gaining a bit of ground. Power Grid, SBI Life, NTPC, Grasim. Tata Consumer, Adani Ports, Britannia are a couple of names. In fact, FMCG is doing well this morning. Britannia, Nestle, Asian Paints, Titan are all in the green. And then you have pharma as well, like Sun Pharma, Apollo Hospitals, that's also in the green. But otherwise, it's it's quite a disappointing start, you'd have to say, if you're a bull. The Nifty is at 17,395 now. Remember, not too far away from the 200-day moving average, which is 17,368. We are threatening to breach that on the downside, and now it's getting worse. The mid-cap index is the one that's taking a big knock, down about 120 points, not looking good at all.
Well, that's right, Sonia. Let's talk about a couple of stocks, though, that have opened up in the green. You have NBCC. Well, they have appointed as a project management consultant for a project in Ahmedabad. So that's one of the rare stocks that is up close to around 1.5–2% odd. IRB Infra, they had got an LOA for NH27 project upgradation, and that project size is around 2,000 crores. The stock has been very, very volatile, but for today it's opened up with a gain of close to around 2%. SpiceJet, keep an eye out on that one. Well, there's a board meeting today as well. They'll be mulling allotment of equity shares on a preferential basis, so that stock has opened up in the green as well. Tube Investments, mildly higher. Their focus on EV continues, so that one as well is up close to around 1%. I think the last time I checked, it's still holding with a gain of around 1%. Paytm, plenty of reports that maybe, in fact, that could be a large investor that's looking at it. Whether or not a deal comes about at some point in time, we'll have to wait by. But for the time being, the street seems to be buying into that. It's up close to around 3% odd. On the index, well, we have moved to the low point of the day at around 17,390 odd. But par for the course, I would say, to see a bit of a downtake, the crucial point will be to hold on to the 200 EMA and the budget day's lows, 17,350, 17,360. Very, very important zone. The bulls are likely to come into fight around those levels. From the broader markets, though, Emphasis, that's one stock that's down close to around 4% as we speak. Hard knock is what we're seeing on that one. Prashant, what else?
I mean, so we've got a 0.25% cut on the Nifty, the Bank Nifty. The mid-cap index is down 0.5% or so. And let's have the Nifty up as well. That's a 90-odd point cut. And this is what I was saying. The 11–12-odd point downtake on the SGX perhaps was looking a little too good to be true in that sense, given the backdrop that we had to start the day with. This is not to say, as I think our Sudarshan, etc., were pointing out, that with the sharp cuts that we've had, over the last 1 week, non-stop, one-way cuts. Pullbacks will not be part of this, but for now, the open has to reflect at least the way global markets are trading, and U.S. markets especially left off in terms of the session. 90 points lower is what the Nifty is at, 17,374. More stocks and what's moving around in just a bit. But Sandeep Bhatia, head of equity, India and country head at Macquarie is now joining us, Macquarie Group. Sandeep, great to have you with us here. Thank you very much. Appreciate you joining in on the program. So some froth has been taken off, Sandeep, evidently from the last time we spoke or over the last couple of months. The question is how much and where do we stand now? So I just want to start with your view on that. Go on.
So I think the froth coming off is good. Clearly, there is a lot which is happening in the world. I think India got hit by events within India, and also the fact that China was seen to be the favorite starting November, December last year till Jan, Feb. But even in China, I think there is now concern. A lot of people are saying that the political uncertainty, disappearances of senior bankers are worrying people who are investing in China. I can see some money coming off China. And therefore, the whole emerging markets, large markets such as India, China, Korea, are seeing a bit of weakness across the board. I would think that would continue at least till the monsoon comes through for India. We have seen unseasonal temperature hikes in India. That could be negative for crop output for wheat. And if that happens, inflation could be stickier than what people expected. US Fed rates seem to still be rising. People are thinking there will be still 225 basis points hikes. So I think markets are essentially going to be coming off in the next couple of weeks and months.
Okay, markets are going to be coming off. This is not looking good at all. In fact, the Nifty is now down 100 points and the Sensex is inching towards almost a 350-point cut. Quite a freaky start to the week. The Adani Group stocks are getting hit very hard this morning, so it's a complete slam dunk there. Adani Power is now down, has halved this year already. Adani Green is the one that you need to pull up. It's an 80% knockdown that we've seen for Adani Green this year. And Adani Enterprise, of course, also under quite a bit of pressure. Sandeep, what do you do in a market like this where, on one hand, of course, there's the hawkish Fed, there are rising rates, there's slower growth. Do you raise your cash levels? Do you book profits? Do you just stay the course? What's the best strategy for a retail investor? Do you buy the dip?
I think you can buy the dips if it comes below, 16,800. It's still early to buy the dips. I would continue to keep some liquid cash and invest in short-term funds and get some interest rates. Interest rates are still good. So I think short-term liquid funds may be the best way for the moment, and wait for Nifty to fall below 16,800 levels and then look at this market. That's the strategy.
Hi, Mr. Bhatia. Good morning. What's the worst case scenario, though, given the kind of concerns that we have, valuations, flows, and maybe, in fact, a weak monsoon ahead? Do you see levels below that 16,800 odd worst case scenario that could possibly play out? 16,000 odd?
See, I think worst case scenarios, it depends on what scenario unfolds. Are we going to see something really bad happen in Ukraine? And that essentially means some kind of a flare-up between the US and Russia directly, or NATO members and Russia directly. Now, then of course, all bets are off and the markets can fall further below 16,000. But these are, anyway, I think no one knows the future, and extreme events can definitely be very bad. I think if we hold the current view, which is that India still remains a growth leader, grows about 6.5% for the upcoming year, 23-24, I would think 16,800 and below are good levels to buy at. The challenge is essentially for India is whether the global environment will be pro-growth or anti-growth, and I think it basically still is a negative for growth globally. So India will have to essentially row its boat against headwinds.
But Sandeep, if anything, I mean, just think about it, where things were 3 months ago, right? China was shut, so no help from China. even 2 months back, US was, people were predicting sharp, recession, sharp, slow, whatever, right? Now, at least the problem is that it's not coming off. Growth is not coming off. And hence inflation is not coming off. China is reopening. So there is an impulse. Those are two large growth engines. So I'm just saying, I mean, is that such a big headwind? It's relative, right? I mean, incremental change. And the change has been a bit positive with regards to these two economies. Go on.
So, our expectation was that US will not be as weak as most people thought. So we were actually looking at US still surprising on the upside, which is what has happened. What essentially is the real challenge is inflation. Now, inflation is being stickier for the Fed and for the world globally. It's a combination of events. It's what you just said, that global growth, especially China, has come through strongly. So I would think the headwinds that I've talked about are not about near-term headwinds, but in terms of a medium-term headwinds on growth globally. So what we are looking at is stagnation in developed markets, especially Europe, and also to some extent in the US, sticky inflation. So these are the headwinds which are not near-term, but would be sticky inflation for at least 12 to 18 months.
Okay. By the way, this whole export piece has been under pressure for a while, right, Sandeep? And now we're getting notes about production cuts as steep as 25% for some of the two-wheeler exporters like Bajaj Auto. Of course, I reached out to the Bajaj Auto management and they said that, it's been happening for the last few months. This whole export piece has been weak, so production has been cut. But as an investor, would you stay away from all the export-related companies, not just in the auto space, but in general, because of the challenges there?
So I think some specific challenges are for Bajaj because of its export markets may face political uncertainty or issues. Whether the entire export piece should be stayed away, I think the biggest export piece, as we all know, is the IT sector. On the IT sector, we have been bullish, of course, with a 2-year view. Again, on the back of the fact that the US underlying economic weakness will not be would not be such a big deal, at least in the short term. And therefore, as far as IT is concerned, I would still remain positive, but it would definitely not be a short-term trade.
Okay, all right. Mr. Bhatia, what about the banking space? That's got the hardest knock, and as we speak, there's a bit of a fight back out there. But the reason the Nifty has corrected so much is because of the underperformance of the Nifty Bank. At one point of time, it is a consensus buy. Your view on the space, and would you look to get in?
I think banks have been the hardest hit for the events which have happened in India in the last couple of months. Clearly, there have been some fears that this would be another banking kind of crisis. I don't think, or we don't think, that that's the case as far as the banking system is concerned. So yes, I think the bank side definitely look interesting. The only reason why people say that don't buy banks now is that everyone seems to be over-invested in banks, and there's no real incremental flows coming into India per se, and therefore no incremental flows will come into an over-owned sector like financials, and therefore banks will continue to underperform. So then it veers down to the basic point: let the market correct, let the market go below 16,800, and definitely from there on, banks will look interesting. Valuations there, even today, are very compelling.
Okay, in fact, the Bank Nifty has recovered quite a bit. Just look at the intraday recovery now on the Bank Nifty. The index itself is up about 104 points. So just pull up the chart for you on the Bank Nifty. It's been volatile, no two ways about that. But now moving to the high point of trade, there has been a fair degree of fall that we've seen in the recent months. So that's on banks. Sandeep, what do you think could be the trigger for this market that could perhaps take it out of this slump? Could it come in from earnings? Is there any recovery that you're expecting on the monsoon front? What do you think could be the next positive trigger for this market? Because clearly, as you were discussing, a while back and through the weekend as well, the retail investor community has sort of lost a bit of faith. There's been, no interest that we've seen in terms of investments over the last many months. What do you think could change that?
Fund flows, near terms, it's always the fund flows. Fund flows coming back to India. India looks more attractive. India growth surprises on the upside. monsoon comes in normally. So it will not be one factor. It will be at least two. I think ideally 3 factors that will get this market back on its feet and up and running. And the near-term impact will be flows change. And flows will not change until there is significant exit out of China. I think that process of exiting China or cutting back on China has started. Political uncertainty and the whole issue around what's happening between US China are factors which is one way why the flows can come back. But we need more than just flows. I need to see growth to surprise. Maybe if it goes above 7%. I also need to see a decent monsoon. That means the inflation risk is lower in India. So that's what I would think can happen.
And maybe even prices sort of staying lower for a while, right? I mean, earnings catching up. So either the two things, either earnings catch up to high prices or prices drift down and then earnings gradually move up. So either of those two things. The Nifty, by the way, is seeing a remarkable fight, right? We are basically, it's a green candle now, which means that we've now moved above the opening levels. The open was 17,428. This was the open today on the Nifty. Then we almost got to the budget day low. The budget day low was 17,353. We got to 17,358. So within 5 points of the budget day low. And from there, it's a very, very sharp comeback. So we are now at 17,440, which means that it's almost a 90 point pullback that we've seen. And it's coming back as we speak, 18 points. I mean, I think I can give it count. But it's coming back very sharply and very nicely. So is this the first of, again, many moves that we've seen, sharp bounces, which again get sold into? I mean, it's not going to be one way. I think that much is clear. But after hitting that sort of almost the budget day low for all practical purposes, there is a bit of a bounce which is very much visible. Sandeep, anything you're excited about as a theme? People that we've spoken with have, for example, brought up railway capex as an area which one should consider positively. Now, how you play it, which sort of segment of the railway value chain you want to be part of, is another matter. But just trying to understand, is there a pocket which you think will grow irrespective of what the rest of the market does?
So government capex is essentially something which people want to look at. I think it's good to talk about. It's difficult to invest. The only big capex story, capital goods player, is Larsen & Toubro. That we have liked. But I think essentially and it's also there's defense capex, so you can look at that. I would think it will be a combination of factors, as I just said previously to you, and those combination of factors would be necessary for the market to get up on its feet. Near term, it will be flows, and longer term, it will be lower inflation and higher growth.
Okay. By the way, one pocket that has been looking good is this entire electric vehicle space. So just want to point out a couple of stocks for our viewers. Olectra Green Tech is a stock that was up 10% on Friday. It's up an additional 11% today. Remember, they formed a technical partnership with Reliance Industries for the manufacturing of a hydrogen bus. They're targeting a commercial launch within a year. Look at that, another 12% higher. Tube Investments is the other one. They've got, multiples to put in money. Private equity players, along with some other players like SBI, putting in money for their electric vehicle, expansion plans. This is a space that has done quite well, although it is still in its infancy of sorts compared to the ICE engine space, Sandeep. But anything in this, either the OEMs or the ancillaries or, the space itself, I mean, do you like it or are you cautious here?
No, we like the entire EV space. Unfortunately, coverage is restricted. I would go with Mahindra's and Tata Motors. They are the two big OEMs. I think those would be interesting developments, and I would definitely stick with them.
Okay, all right. We will leave it at that then. Thanks a lot, Sandeep, for joining in. Well, for now, the market is using all its might to recover and stay in the green. The Nifty is now down just about 30 odd points. A couple of stocks deserve mention. Paytm is now up almost about 3 odd percent. IRB Infra on the back of an order win is up almost about 3% as well. SpiceJet is up about 2.5 odd percent. A couple of banks are doing well. But let's look at the overall consumption piece. As we've been telling you, the rural tier 2 market has been under pressure, but luxury has been doing very well. Berger Paints reported a weak Q3, largely on the back of higher raw material costs, extended monsoons and short festive season. The company in their earlier interaction had guided for a demand and 200 basis points improvement in gross margins. To discuss more on this and demand trends, we're joined by Abhijit Roy, the Managing Director and Chief Executive Officer at Berger Paints. Abhijit, thanks a lot for joining in. First, on the demand situation, have things come back? Has there been any recovery at all? Because the rural market still seems to be struggling. Can you quantify it for us? In Q3, your domestic volume growth was a little over 6.5%. What do you think you can do by the end of Q4? And how will things shape up in FY24?
So the demand has revived, actually last year, as I had mentioned, in my previous interaction, Q3 had a very high base, and that's why the growth rates were limited in the Q3 of this year. However, Q4 is a normalized base, and therefore we expect double-digit volume growth and value growth in Q4. So if you look at the demand scenario, it seems to be fairly okay. Thankfully, the rural demand also, in our case, it's not rural actually, it's upcountry sort of. That demand has revived a bit in the month of February. So earlier, the urban centers were doing much better. But in February, it's the upcountry also, which is doing relatively better than what it was doing earlier.
So you said expect double-digit volume and value growth in Q4. Would you extrapolate that for FY24 as well? Any initial signs?
We don't commit on that, but yes, it looks like that, we should be able to do a double-digit volume value growth in 24 also.
Oh, that's good news then, Abhijit. If you're going to be growing at double digits, what's your market share? I think your first half of the year it improved by around 80 bips, 18.8% odd if I get that number correct. Where do you see this number headed?
More towards 19.7 to 20%. That's what we are looking at. In terms of market share. Currently, we are standing at around 19.4, 19.5 actually. But if you take the listed companies into account, but I think we should be able to cross the 20% mark hopefully next year.
Oh, that's an encouraging sign then. So market share improving to 20% will be good from an investor perspective. What about raw material cost? You were guiding that gross margins will gradually improve to the high 30s. Could you tell us where do you see this number headed? I think you were guiding for a number of around 37, 38% earlier. Do you think you're going to be getting there? And how are the costs panning out?
Yeah, so it will be around those points. Exact I can't say at this stage, but it will be around the 37, 38% in Q4 itself. And hopefully we'll be hovering around those points. Going forward as well.
Okay, all right. So I was reading a analyst note, and this is. The note points out, if I can quote this, they say that Berger reported strong revenue CAGR of 25% between FY21 and 25. Between 21 and 23, the CAGR revenue growth was 25%. However, they say that there will be negligible price hikes in FY24 and 25. So volume growth is likely to be weaker, along with revenue growth, which also will be under pressure because of competitive pressures, revival of unorganized, smaller players, and generally high inflation levels. I just wanted to comment with regards to this 25% number and what growth will be going forward. I mean, you said double digit, sure, but what can we expect?
So, we don't give such forward comments, but, I can assure you that, it will be in the double digits. That's what we are looking at. It can be 10%, 12%, 14%, whatever. Around that range. It will not be, of course, 25%. That's something which was there because of the COVID period, and hence you are seeing sort of a surge from the lower bases. That is not a sustainable thing, but we will be in the double digits and a comfortable double digit area.
So you said it could be, you gave us a range, could be anything between 12 to 14%. is that the volume growth? And will this ability to take price increases, etc., would you concur with it? That is generally going to be difficult at 24, 25 because of the factors mentioned?
So volume and value growth, going forward, unless the price increases happen and unless the raw materials misbehave, will be on similar grounds. As of now, the raw material prices are stable. So the volume value differential will go down. It will not be there anymore. So whatever we have, the volume growth, maybe incremental 0.5 to 1% of extra will be there in terms of value growth. So it will be very close to each other. So that's why I said that, the price increase led volume value gap won't be there. So, a part of the 24-25% was on account of the price increases that happened, which was about, 8 to 10% more, on an average basis, if you look at it. The increases have been over various periods of time. And then increases were about 18-19%. So, that is why that also resulted in a value growth, which may not hold. So, volume growth remained at around this year also at around that 10% level or 11%, 12% level, but the value growth had surged ahead because of the price differential. That will go away, and so the value gap will not be there anymore.
Just to kind of finish that loop, not to hold you down to any particular number, but it should be, so overall sort of value growth should be 14-15%, 24-25, I mean in that range, right?
So, we will try for that. It will be in double digit for sure, but, we don't know whether it will be 12% or 14% or 15%, but it will be somewhere around that double digit thing.
Okay, got it. I have to ask you what you're doing to combat competition, because it's real, right? I mean, not just well-entrenched players, but now there are newer players like Grasim that are entering the paint space. They hope to launch by Q4 of FY24. Will you be raising your marketing and advertising spends? Are you expecting a lot of pricing pressure? What could the way forward look like?
So it's difficult, Sonia, to actually predict. It depends on what the competition does and, how we will respond at that point of time. We have built up various scenarios for ourselves. As of now, we are focused on, delivering better value to our customers, consumers in general, our other ecosystem, dealers, painters, etc. We have to take care of that part, and we have to become more efficient there. I do not expect anything dramatic happening, but if it does, then we should be prepared, mentally, and that's what we are, working out on our own. We have built up various scenarios which are possible, and how we should be reacting under such scenarios.
Sure. The reason I'm asking is, it's also perhaps reflecting in your stock price, right? I mean, the stock in the last 1 year is down 20%, but that, of course, has nothing to do with how you run the business. It's the overarching theme of higher competition kicking in. Will you be raising your marketing and advertising spends? If yes, as a percentage of sales, how much could it go up to?
Yeah, we will be raising somewhat. We don't know exactly how much it will be, but as of now, but we will be raising some our marketing spends a little bit.
What is it at as of now? What is it at as of now?
So in terms of pure television and digital, it will be around 2.5%. So that can go up substantially, maybe about another 0.5, 0.7% increase can happen. That's something we are looking at, and then that will depend on, how it shapes up, ultimately going forward. But it is not going to impact so much, in terms of the margin as well, because I believe that the raw material prices have softened, somewhat, and we are in a position to do that.
Okay, all right. And that facility in Lucknow has been commissioned, right?
That's right. It's just been commissioned, on the 6th of Feb. So
so that's good. And you've put in 1,000 crores at peak levels. What kind of a revenue can you get out of here?
So, yes, 1,000 odd crores, 1,015 actually to be precise, which has been put in there. It increases our total capacity by almost 45 to 50% from current levels. So it's a big plant, and it can really help us in terms of, for the next 2-3 years, we are more or less covered in terms of production volumes.
Okay, all right. All the best. Thanks a lot for joining in and speaking to CNBC TV18, and all the best for the year. That's Berger Paine saying that demand has revived. Rural demand has seen a recovery in February, and they're expecting double-digit volume and value growth in FY24. So that's an optimistic view. But of course, competition has also gone up. Let's slip into a quick break. Up next, we talk about the metal space. Pinakin Parekh of JP Morgan will be joining in to talk about demand trends. We'll also connect with Anindya Datta of VIP Industries to discuss their demand outlook going forward. Stay tuned.